Yes, well, that's the day for Vijay Shekhar Sharma to say it. Sachin Dixit, lead Internet Research Analyst at JM Financial Institutional Securities, joining us this morning to break it down. Sachin, are you feeling the optimism that Vijay Shekhar Sharma is portraying in that conference call as far as 197 is concerned?
Vijay is generally a bullish guy anyways, so I will not doubt that. But largely, I think the optimism can be felt just in the stock movement that we have seen in the past as well. The stock has been quite an outperformer in the recent past. And thanks to this result, I think that outperformance could sustain because the company has not just given a good result. They have also been quite bullish on the commentary. They have talked about the fact that their contribution margins are going to be healthier going ahead. There is obviously immense operating leverage in this company at almost like 55-60% contribution margin and the revenue growth of close to 25 odd percent. That's a huge operating leverage that you can drive in a business. So which is the primary driver of profitability, right? As Harsh was showing some time back on a channel wherein basically how PAT had moved in the last 5 quarters is largely a function of that operating leverage being visible at 55-60% contribution margins.
So, hi Sachin, morning. The question then is that last point that VSS said in that bite that we played out, what we took from the conference call, that he's calling break even and going forward he's talking about a much larger profit. The question is visibility. When does that come in your opinion? And what will give you the confidence of that taking place? What are the metrics that you will need to see in Q2 and in the rest of the financial year for that to take place on a sustained basis?
Sure. So I think overall, when you think of that payments business being break even to moving to higher amounts of profitability, a lot of it is going to be driven by the value add that the company is driving, right? Or a large part of that payments business is UPI, which is not yet monetized without any MDR on UPI payments. Right. So without that, basically the company has a large subscription revenue wherein their devices are like top of the street. And they are getting good amount of traction. Thanks to these devices, the company is able to cross-sell their loan products. They are able to cross-sell fraud detection and other services to their customers as well. So all of that combines to give you a large revenue pool. But I think a big boost to this revenue pool will need to come from UPI MDR in case it comes whenever it comes. I personally of the camp that UPI MDR is more of a question of when rather than if, because there is a pure play business case of why MDR should be there, right? There is obviously right now you see large offline merchants as well as online merchants. They are taking payments via credit cards, debit cards, where they are paying a lot of MDR compared to what is being, proposed on UPI. Right. So there is no reason for the government or the ecosystem to subsidize these large offline and online merchants in terms of their UPI transactions. So which is why I believe there's a business case of UPI MDR to come. Obviously, it's in the end of government, how they want to bring it or when they want to bring it. But I think when it comes, it can be a very sharp driver to Paytm's revenue and profitability both.
Sachin, very quickly, it trades at what, a 30% discount to PB Fintech. Is that the right way to look at it? Do you reckon that could narrow?
I think it should narrow. After all, both the companies operate in segments which have longer term tailwinds. Right. Insurance obviously is an under-penetration story in India. Payments again, right, assuming that India is roughly a 11-12% nominal GDP growth story, payments businesses will continue to grow slightly faster than that.
So Sachin, sorry, slightly stretched on time. So assuming that it opens slightly higher, and by the way, thank you for the explanation. It's been lovely talking to you today. But if it opens up slightly higher, right, 4, 5, 6%, whatever it does an eternal of yesterday, would you still be a buyer?
So I recently, like last night, I published my note. I have a TP of 13-20 rupees on this name. So in that sense, obviously, I remain bullish on this name. Obviously, there could be like a short-term profit booking sort of things can come up if the stock has run up quite a lot in the recent couple of weeks. So can't predict those technical things, but in a longer term or slightly medium to long-term perspective, I remain bullish on this name.
Okay, so bullish on Paytm buy at these levels. Thank you for that, Sachin. Would have liked to talk to you more, but we're completely out of time. Maybe also talk about how AI has led to operational efficiencies. I thought that was a very interesting comment coming in. And is that a change that we're seeing. Sachin Dixit there of JM Financial saying that this is a well-deserved turnaround and you will see an upside on the stock today. Watch out for Paytm, up in mid-teens in the last 1 month as well. Very short break. On the other side, we have so much packed on the show. Top trading